grab a seat right there, please. Okay, so Curtis and Michelle, my name is Barry, and we videotape all of our interviews.
Okay.
Okay, looks like you guys have got some fantastic income, 130,000.
We have good money and actually have halfway decent credit, but I'm self-employed, so.
Oh yeah,
Well-
you're the backbone of the American economy, but you get the short end of the stick when it comes to loans.
Self-employed, but the people that own the company have known them for years. They actually write me checks with stubs. So I do have, and I don't even save them. I just figure I'm gonna be renting forever, and I never needed any of this stuff, so. But I found quite a few of them that showed what kind of money I made, but,
Okay, and your credit score is about how much?
656.
656, and you've already made a loan application and got denied?
No, I have not.
Oh, you've not made a loan application? Okay. So,
I mean, I
you
have
think
years
you
ago.
might get approved?
No, I talked to a realtor a couple months ago, and he said, and I basically said, oh, you're self-employed, there's no financing for self-employed people, so it's just a waste of time.
Well, I had a guy self-employed, he came in here about, it's unbelievable, he came in here about a month and a half ago, and he had a 715 credit score,
Mhm.
and he had a free and clear $420,000 home, and he's buying an investment property down the street for $209,000, putting $109,000 down. M&T Bank approved the loan. The day before the closing, he said, "You're self-employed. You have a lot of tax write-offs." So anyway, so I called my hard money lender,
Yeah.
and I said, you know, they're putting $109 down on a $209,000 house. What else you need to know? He said, we don't need to know anything else. We closed the deal in 48 hours.
Sure. Yeah.
So it's crazy.
It is crazy, isn't it?
It doesn't make any sense at all. Okay, so I understand your situation and what kind of work you're doing,
I
logistics?
haul cars for Hennessy Performance, which are super high dollar sports cars.
And you haul one at a time or multiple ones?
One.
You haul
One
cars?
or two,
okay.
yeah, and I handle all the movement. They usually have 10 or 15 cars out and about in the, getting certain things done all over the place. So
And what do you do, Michelle?
she doesn't work, she stays at home.
Oh, okay. And you've been doing this for 25 years in the industry?
She used to work for Love's Truck Stops, but she got hurt on the job.
Okay.
Someone is basically forced into retirement.
Okay. And do you own a home right now?
No, we rent.
And you're paying $1,700, and you've been there how long?
3 years.
Okay. But you've owned homes before?
Yeah.
And but the 650 credit score is good, and there is a lot of difference between a refi and purchase. So we're finding that people in your situation may qualify for a refi, but you may not qualify for a purchase. But we analyze all angles for you. And so you found our website here, and that was how did you find the website?
Actually, I saw it, I was looking on Craigslist for something, and I decided just to look and see if there was any owner-financed houses for sale.
Oh,
And
okay.
that's where I found you at.
And so, when you saw the website, it has got, did you find it confusing or was it easy?
It's fairly straightforward, yeah.
Okay,
It's
just
pretty
curious
basic,
because
yeah.
we're having a new website put together. And I told them I wanted, the simpler the better.
Yeah,
That's what we
right,
do, it's a
right.
simple concept. I'm gonna go ahead and show you our program, and let me turn off the light so it'll see the wall better and close the door here. So you saw some of the homes that we closed and done recently?
Yeah.
Yeah. Some absolutely incredible deals out there. Have you guys found any deal you're interested in?
Actually, I found one kind of out in the country, a little bit out of Sealy, that I think could be a real good buy.
Oh, okay.
It's been empty, I've seen the house sitting there empty for about 2 years. Has a realtor sign on, he said he's had it listed for over a year. They had one write-up on it, and the people couldn't qualify. They originally were asking $150, they were $125. I had another realtor tell me house is worth $85 grand, because it needs a lot of updating inside and stuff redone.
And what would it be worth after the updating is done?
150, 160,
Okay.
maybe even 175, and it's a nice lot,
Oh, that's
about
the
an
type-
acre, yeah.
That's the type of deal that we look
Yeah,
for.
yeah.
And we supply the acquisition money and the repairs and everything.
Mhm.
Okay, so here's what we do. Curtis, it's income-based funding as opposed to credit-based funding. So you can actually own a home with big equity in it. To qualify, you must have strong income. You do. You must be able to find a deal, like a foreclosure, a short sale, or an estate sale.
This is an estate sale.
Yeah, those are the deals, those are the bargains.
Yeah.
And so you're capable of doing that, and we get you into the house for less than $10,000. So that's basically what we do. Now, credit-based loans actually deny the American dream to over 90% of people, so you're not alone in your situation. And I listed self-employed people right off the bat,
Yeah.
because they're the ones getting beat up by
Oh,
the
it's
lenders.
ridiculous,
It's horrible. And so a lot of people can't qualify, a lot of those 90% may be self-employed. Then you have divorces, half of all marriages end in divorce, and that destroys more credit files than anything. And identity theft, of course, wipes out millions of credit files. It's hard to go through this world without a lot of medical bills, and that actually causes more bankruptcies than anything. All your kids are grown, so I guess you're past the medical bill disasters.
Yeah.
Down the road.
Student loan defaults, we get those all the time. Millions of people are evicted from apartment complexes with their credit being destroyed. Businesses fail 90% of the time, and of course that wipes out credit files, and tax liens from the government on citizens destroys credit files. We have lawsuits. Our country's all about lawsuits today. Millions and millions of them. Half the people win, half the people lose. The people that lose get a judgment, they can't get a house. This is a tough one. Credit card companies, cable companies, cell phone companies, they all like to overcharge you. And if you fight it too hard, they'll destroy your credit. So then we've had 25 million job losses. If you're lucky enough to have gotten a job back, you might not have been on the job long enough to qualify for a loan. So that's why 90% of people can't get a loan. So one of these things or another. Foreclosures have affected millions and millions of people. If you got a foreclosure on your record, forget about qualifying for a loan. Millions of vehicle repos, you know about that, every year. If you got a vehicle repo, you're not getting a loan. So it's amazing anybody's got good credit. People kick you when you're down. You go through humiliation and suffering. You get a new job or a new business. You get back on your feet. You get a new life, new wife, new husband, something like that. But you guys have stayed together, so that's good.
Yeah.
You get good income, you save money. So what do you want to do? Try to buy a house. And what's the lender going to say?
Nope.
You know, they say you need another 7, 10 years of punishment. You haven't suffered enough.
Right.
So when you've been through this whole cycle, what do people do? They look at owner financing. They find limited choices.
Yeah.
They find everything is overpriced and ridiculously high down payments. Because I went to an investor training seminar, and they were teaching people how to sell homes 10, 20, 30, 40% over value because it's owner finance. So when that doesn't work, people investigate creative finance, like a lease purchase, a lease option, a contract for deed. And the problem there is the same thing, limited choices, it's all overpriced. But even worse, no deed means you can lose the home even though you paid as agreed.
Right.
You don't want that.
Or you pay and they're not paying the payment.
Yeah, they don't pay, they don't cooperate. They get an IRS tax lien, it goes on your house. They get a lawsuit, a Les Minnis goes on your house. They die, it goes into probate. They get a divorce, the husband and wife are fighting over the house, forget it, you're not getting it. They go bankrupt, there goes the house. Any of that stuff happens, so you don't want to do a deal without a deed. So people resort to renting, and that's like throwing money out the window, because rents are going higher and higher right now because nobody can qualify for loans, so everybody's renting, pushing the market up.
That's what's driving this rent up so crazy, isn't it?
Yeah, that's driving it, and the fact that 1,800 people a day are moving to Houston. Imagine 1,800 people, it's like a small town moving in here every
Yeah.
single day of the month. So, what about getting help from family or friends? Problem is, they're probably in the same boat as you are credit-wise, but even if you could get help, you probably never hear the end of the story.
You wouldn't do it.
Yeah, you would
Too
want to
old
do
or
it.
too old.
So, Zig Ziglar, you heard of him, a
Yeah.
famous national speaker, he says, get what you want by helping others get what they want. Very powerful concept, it really works, our entire company is based upon it, and it's basically just people helping people. And so, you're in a situation where you want to get owner financing on a great deal. Is that right? And then there are strong credit people who want to make money with low risk. So basically, these two sets of people can help each other out. So we're the conduit. We connect you to somebody with powerhouse credit. So with your income, 130 grand a year, if you had somebody on your team with real strong credit, that would open up a lot of doors, right? Of course. So we have what we call angel investors, and they create miracles for families who could not otherwise qualify to get into a home, and they do what we call socially responsible investing, which people today are becoming more and more concerned about where their investment dollars are going. Are we investing in a company that's destroying the environment? Are we investing in a company that's doing bad human rights violations? Or are we investing in a company that's helping put our neighbor into the American dream of home ownership, maybe reducing foreclosures, creating jobs, and all that type of thing? So we show our investors how to get a hard money loan. A hard money loan will allow you to close any home in any condition within 15 days. And a hard money loan will allow you to get all the repair money provided. Now, a conventional lender, on the other hand, they're not going to loan money on a home that's in bad condition, not even if you have an 850 credit score. So like if you're trying to get an FHA loan, they don't have a stove, they're not doing that loan. So we have people that want to buy a foreclosure or a home in bad condition, and they come to us to do it, because hard money loans are strictly for investors, they're not for owner occupants. Okay, we deliver great terms, 20-year loan. If I had to do my life over again, I'd do all 15, 20-year loans, because 30 years is just too long to pay interest, and you build up your equity faster on a 20-year loan and you pay less interest. So that's good. No prepayment penalty, so that's what counts, no prepayment. The fixed rate is 9.9%. Well, that's good because that allows the investor to make money, and that now they have a financial incentive to get your home of choice. You're scratching their back, they're scratching your back. But no prepayment penalty is what counts, and the PITI is less than rent, principal, interest, taxes, and insurance. Because I remember back in the 80s when if you had a 9.9 rate, you hung the moon because everybody's paying 16%.
It was a good rate back then.
Now it's considered high rate, but as long as your payment is less than rent, it's a good deal, and you're going to refi anyway. A fast refi is very possible, and we're going to show you a little bit more information in a little bit on that. Now we use a rubber stamp process. You get a deed to the home. That's what you want. You get big equity in the home, and that's what you want. We don't take advantage of you based upon how bad your credit is. So in the present system, they pretty much just pull your credit and they say, okay, we're going to smash you down and make it that much harder to get back up. That's not a way to help people. We want you to find a great deal. Okay, a great deal is a home that's 70% ARV, 70% after repair value. That means if a home's after repair, if it's worth 100 and you buy it for 70, that's a pretty good deal. Okay, a 2,000 square foot foreclosure at $35 a foot might be selling for $70,000. Those deals are out there. Now, if the repairs on the home is 20 grand, that means it costs 90,000 really for the house. Now, if we find that there are comparable sales in the same subdivision for $70 a foot, that means that house is worth $140,000, because you just take 70 times 2,000. And 70% of 140 is 98. That's how much a hard money lender will give us. So that's more than enough to buy the home and to fix it. That's the type of deal we're looking for.
Right.
If we don't need 98,000, we just take 90. If you put more money down, we need less money. Now, you can ask a realtor to pull comparable sales for you to figure out if the deal's good or not. You can use any realtor you want. You want to tell the realtor what you want. You want to tell the realtor that you want them to pull comparable sales in the same subdivision in the last 6 months on similar sized homes. Now, if you're out in the country, you go out within 2 miles typically.
Yeah, it's not, you're not that far out, I don't think, about a mile.
So you have to know, you have to tell the realtors, because a lot of realtors have no clue on what needs to happen. So this is what needs to happen, and I'm gonna give you paperwork so that you know all this in writing.
Yeah, he wouldn't even come out and show us the house once he.
Oh yeah, that's standard operating procedure.
Tried to talk us out of it,
Yeah, he was,
basically.
Yeah, okay, so now we're gonna add value to the home. Now, And the investors can get repair bids, you're welcome to get your own repair bids. Now, the goal is quality work at a low price. The target is to complete the repairs within 30 days and move into the house. Now, when you move in and the repairs are done, the house is worth more money.
Right.
So we're gonna order a new appraisal. Now, the investor will then get a new loan, because now the home is worth more money. He's gonna pay off the hard money loan. And now you're gonna pay to get a rap deed in your name, which will be recorded at the county courthouse. That means you own the house, you get the homestead exemption, you get the tax write-offs, you get everything, you own the home. Now, to do that part of the deal, and we call it a wrap deed because everything is wrapped. He might have a loan on the house for $900,000, he's giving you a loan on the house. If he's got 5% interest, he's giving you 9.9, that's how he's making money. He may have a 30-year loan, he gives you a 20-year loan, they call these wrap. Okay, now you can use any attorney, title company you want, and the price ranges go anywhere from, lately it's been as low as $450 to $6,000, depending upon who you choose. And I can direct you to somebody if you don't have somebody to do that. Now here's the question of the day.
Sorry.
No problem. If you found a foreclosure with 50,000 plus equity, and of course you know those deals are there,
Yeah.
and we have a person willing to use their credit and their cash to buy it, fix it, and owner finance it for you, they're gonna do all that for you, would you be willing to pay the person that helps you $67 a month extra?
Sure.
And that's what most people say. They say, sure, that sounds fair enough to me. So you pay a fair and reasonable fixed fee for services rendered. The fixed fee of $67 a month is actually the same thing as $15,000 amortized over 30 years at 3.5% rate. So after taxes, $67 a month is really to you the same as $45 a month. And you can't even get cable TV for $45 a month,
No.
let alone a great deal on foreclosure. So our fixed fee to make this happen is $15,000 or 15%, whichever is greater. So courtesy Michelle, what I want you to take from this slide is that our program is not too good to be true. Because that's why a lot of people say, oh, this is too good to be true. It's not too good to be true because the investor who helps you, they're making 9.9% interest, and when you resell, you sell or you refinance, they're gonna pick up 15 grand or 15%. This is why the program works.
Yeah.
So this is the aha moment that we want people to capture from this. Okay, so now you're gonna get a cash price, you're gonna get all these benefits. We're gonna offer, when you pick out the house you want, we're gonna go offer the bank cash. Like we got a deal up in New Waverly. In fact, I just put it in my case there. Fantastic deal. House, office, all these improvements, 6 acres of land. They had it listed for $192. They lowered it to $179. They lowered it to $145. We offered cash and gave it to us for $120. Well, anything that we beat the price down, that goes to your benefit because the investor is working on a fixed fee for services rendered.
Right.
So a lot of times the investor, what you're paying the investor is really went to you for free because you can't offer cash for the deal. Now, we offer no financing conditions, 15-day close. A bank, they may take a lower cash price for cash instead of financing because they know the finance offers are falling through, nobody can qualify for a loan. Now, you're also gonna get the benefit of the lower price, but it is easier to get the offer accepted, and that's the bottom line. If you got more than one bidder, it's who's gonna get the bid is the outcome. Now, all costs are gonna be documented and rolled into your loan. Cost of the home to the penny, financing and the repair cost, the investor's 15% fee. Everything's transparent, everything's full disclosure, everything's on the table, there's nothing hidden, just a straightforward transaction. Now, the $5,000 down that we require is paid in 3 stages. First, when you want to make an offer on a house, we can't make an offer without $1,000. When the seller signs the contract, we have a real deal. So now you bring in $2,500 more. And then the day before we're funding the deal, you bring in your other $1,500, step by step. So $5,000 is a reasonable, comfortable amount of money for most people to come up with to get a home. Now, the more money you put down, the lower payment you will have. So, plus you'll have more options on more homes. Because there might be a skinny deal where there's not quite 30% equity. Well, that can be shored up with more cash.
Sure.
So that's how you get more options. Now, most of our clients are putting $10,000 down, or they're putting 5,000 down and they're doing their own repairs typically. Now, if you cannot find a house with 30% equity, and you had 20% down, you can pick any house you want, no ARV requirement, no nothing. 20% down, you go pick out anything you want, new, resale, doesn't matter. And if somebody put 25% down, which is sometimes the case, then we give you a little bit lower interest rate, 8.9%, because now we really don't have any risk to speak of on the deal. Now, banks require a pre-approval letter and 1,000 earnest money, or they will not even look at an offer. Okay, so now when you find a great deal, you've got to be ready to make an offer quickly, because other sharp people are going to recognize the same opportunity. And it's really competitive market out there right now. You're going to have big equity on day number one, and here's an example of a typical deal that we do. Here's a foreclosure on a 2,500 square foot home. This home happens to be on a two-story home on a half-acre of land off of Kuykendall in 1960.
Okay.
If you go north on Kuykendall from 1960 on the left, it's in Pecan 4 subdivision. It's a house on Michael Street. Beautiful subdivision. The ARV is 150,000. Do you remember what ARV stands for?
After repair value.
Very good, just test it. Okay, so as is bank price, 69,000. Repairs, 15,000. Financing to get two loans, hard money loan and permanent loan, burns up about 10 grand. Your price would be 94 plus 15 for the investor, makes 109. Put 10 down, finance 99. Well, that's a great deal because you got 51,000 in equity because the home is worth 150 and you only owe 99. So the question is, what's the payment on $99,000? If you take 99,000 at 9.9 rate on 20 years, payment's 949. So that's not too bad. Taxes are 210, insurance 90, total payment 1249. The important thing is it's less than rent. Even at 9.9% is less than rent, because that house would rent within a week for $1,500 to $1,550. So that's a good picture there, but there's a better picture, and that is you want to refi this thing as soon as possible, because we have these historically low interest rates. And if you had a 3.5% rate on 99 grand, it would drop your payment from 949 to guess how much?
Oh, I'm guessing 6.
What do you guess?
6
Seven
and a half.
something.
7. Curtis
Oh,
Payne,
really? Wow.
445, yeah. Payment drops $504 a month, so you want to refi as quickly as you can, because that's what you want. You want low overhead while you build equity. So, a refi is easier. This is the best news. First of all, just imagine you've been paying $949 a month for 2, 3, 4 months. Bank looks at this and they say, okay, Curtis, you're applying for a 445 note, you're paying $949, you're paying double. I guess you can afford to pay half. That looks good. Second, say, Curtis, you got big equity here. You got 50 grand equity in this house. So there's less risk to the bank. It's not a 97% loan like it's normal, FHA 3%. There's not even going to be any PMI, no private mortgage insurance to cover the top 20% of the loan. As a result, the credit score requirement is lower. We're actually able to roll those deals through at 580 credit score. You're already sitting at 600 something. So you are a perfect candidate to roll into the program and refi. Now, we provide a valuable service, and probably the number one thing that we do of value is we bring a strong credit person to the table. Like tonight, I'm going to go speak at the Quest IRA Club. They manage, I don't know if you ever heard of Quest IRAs. They have self-directed IRAs. They're managing over $1 billion in assets. They have thousands of members. So there's going to be about 100 people there tonight. I'm going to go there for 2.5 hours, and they're going to let me talk for 15 minutes. They talk about investing your IRA in real estate. Tonight they're talking about the good, the bad, and the ugly. They're going to talk about investors who've got into bad real estate deals and how to avoid that. And I'm going to stand up and say, you know, there's Murphy's Law out there, and how the roof can have to be replaced, the AC, the plumbing can break, the electrical, on and on. If you want to reduce your risk, why not be a lender and get involved in a house that's sold before you buy it? And that I explain to them what I do here. We find the people that, and they find the house, and then I attach the deal to you. You make a profit, they get their house with owner finance, they refi, you get your cash, they get a lower payment.
Really smart program.
Yeah, that's what we do. So we issue a pre-approval letter within 2 days. It's good for up to 1 year, for up to 150,000 with only 5,000 down. We go up to $1 million, but as you go over 150, the down payment requirement rises rapidly because the risk on a bigger loan is higher. But anything 150 and under, this is a hot market. People are unloading it, it's going straight up.
Yeah.
We coordinate the closing. We stay with you until you get the keys, move in, and get a deed in your name. So, what is your cash out of pocket? Well, I said it's less than 10,000, so here's your cash out of pocket to do a deal. You pay the appraisal, you meet the appraiser at the property, he's going to confirm. The hard money lender, they will not risk a dollar unless they know that there's 30% equity when it's all done. That's just the way, what they do.
Right.
That appraiser protects you to make sure you get a great deal, protects the investor to make sure the investor doesn't get into a bad deal, so that's good.
And that appraiser does not share that information with the realtor, or does he?
He will give it to, we order it on behalf of the investor, and then the investor authorizes us to get a copy of it, and then we give you a copy. We do full disclosure on everything, you'll see the appraisal.
But the owner of the property doesn't?
No, the seller doesn't see it.
Okay, good.
Okay, then you have 5,000 down. We have a $2,500 home buyer consulting fee. The total out of pocket is $7,875. All other costs are rolled into the mortgage. Anything unexpected that could occur because there's equity here. So like if somebody said, oh, we need a survey here, or or we need a second appraisal or something like that could be rolled in. So there's no surprises, so your out of pocket cash is a known variable. Now you don't want to put the cart before the horse, meaning you don't want to go find this fantastic deal and then try to get your financing approved, because by the time you get the financing, the house is gone. So you're doing it the right way, you're getting the financing approved, and then when you find what you want, you make the same day offer, lock the deal. To view homes, you use any realtor you want. Now, you will want to show them the pre-approval letter that you got from us, and we will provide a letter of instruction for the realtor on how to punch out the offer. Because when we make an offer to buy the house, they're representing us when they make the offer. We do it in the name of a trust. Create a brand new trust on every deal. We sign it to the investor, then the investor closes it out. We have a no-risk approval process. All you do is you put up $200. It's no risk, because if we don't approve you, your $200 is in writing given back to you. So you don't have to worry about paying out money not getting approved. We're going to send you notice of the approval. Then we will schedule an appointment for you to come back in, when you will bring any stipulations requested on the approval, and then you pay the balance of the consulting fee, and then we will guide you through the entire process, and we will explore all avenues for you. We don't just do this particular aspect of the program, but we've got mortgage lenders that we're tied into. We're able to have your credit looked at and analyzed, and then have your whole package. We do everything in the client's interest, every step of the way. So if we see that a couple of minor items can be done and we can straighten out your credit, we would do that for you. Any questions on how the whole thing goes?
Pretty clear on this so
Yeah.
far.
Okay, yeah, most people don't have any questions. It's, they're fairly clear on the.
Does the loan report to credit?
If you select to pay the extra, and I'm negotiating with the guy right now for a lower price, but if you decide to pay an extra $60 a month, then it gets reported to the credit bureaus. Now, even if it's not reported to the credit bureaus, like you may decide to pay the investor directly and not use a note servicing agency in between you and the investor. The good part about having a note servicing agency is they're providing documents and records for you, and you know that every single payment is being made. What was I going to say? Okay, so even if you don't pay that, and you pay the investor direct, when you go to apply for the refi, they're going to look for 4 pieces of good credit. They will count your timely payments on the house as one of your pieces of good credit, and the investor is going to verify that you pay timely. So it's kind of the same thing, but it's nice to have that mortgage on the credit bureau.
That's what they said. My credit score, they said, will probably not go up much higher than it is because I have no real estate.
Yeah, so you need a piece of real estate alone. That alone is going to be something important. Okay, so, and when you also come back in, that's where we also teach you how to search for and analyze the best deals and get the great deals. Now, I'm gonna show you a couple of items that we're going to give you to take with you. One of them is your let's see, what is it? Client processing sheet, where is that? Oh, there it is, there, that's why I couldn't find it. Okay, home buyer process. Okay, for most people, the money is the most important thing to them, so we put that right up at the top. You pay $200, then $2,300, then $1,000 earnest money, then $350 appraisal, then $2,500, then $15, you're done. How you search for homes, we've got that on there, the har.com website. Have you been on there?
Yeah, I have.
Okay, so we give you information and teach you how to find them, find deals. If you find something under 30 square foot, it's probably got a lot of equity. Find something under $40 a square foot, it's probably got equity. You find your winner, you have a realtor pull the 3 high comps for you. If there's no high comps in the subdivision, they go outside the subdivision up to 2 miles. You run your own ARV calculation. If the listing agent won't give you comps, call a selling agent, they'll give you comps. If they don't do it, we have what we call our ARV department, and you can email them any day and they respond within 24 hours with all comps in the subdivision. But you just take the square footage of the home times the high price per square foot, that's your ARV. So there may be comps of 35 in the subdivision, and there's comps for 70. We know that if we spend enough money to make this house worth the same as those, it'll be worth 70.
Sure.
So you can calculate your ARV times 0.7, that's how much money we got to work with. Once you understand that, then you can pretty much run your own numbers. You gotta have enough money to buy the home and fix it, or you have to increase the down payment. You view the home, you have a realtor show it to you, you give them a copy of your pre-approval letter, or they're not even gonna wanna work with you. If you want to make an offer on the home, you make sure that you have a blank $1,000 money order. It's what I recommend to verify that earnest money is immediately available, because now the realtor, when they submit an offer, they don't have to have the real check, they can take a photocopy of the check. Now what you're ultimately doing is we're the ones that are gonna buy the house, but instead of giving somebody else a check, and then maybe the offer doesn't go through, may as well just give them a photocopy. Then when the offer goes through, then we'll tell you what to do with the check, and it's typically gonna put the name of the trust on the check, or IVF, or something like that, and it's gonna go to the title company. So we've got all the steps that I outlined previously. You make sure your $1,000 gets to the title company, you pay for the appraisal fee, you get repair bids if you want to as well. You bring in your $2,500, you sign the owner finance docs. Day before closing, you pay the balance of $1,500. The investor closes with a hard money loan. We complete the rehab, typically within 30 days, you're moving in. Payments begin 30 days after closing. The investor gets a new loan, he pays off the hard money lender. We calculate all the final numbers, and then you pay for a deed, and it's recorded at the county courthouse. So that's a nice, simple outline. We give you that. Okay, and then I want to show you the other important document. We've got realtor instructions that you'll give the realtors so they know exactly what to do, because our program is unique and different. This is our consulting fee agreement. So I'm going to read that one for you word for word. It says, the home buyer consulting fee agreement is entered into on, is effective on this date, by and between Income-Based Funding Commitment Resources, a Texas corporation, and client. Under this agreement, client agrees to pay consultant an initial non-refundable fee of $2,500, an initial deposit of $200 has been received in the form of check or whatever. Consultant agrees to issue a pre-approval letter for owner financing within 48 hours for at least $150,000 that would be good for 12 months. Buyer represents that they have $50,000 or more annual income. If client cannot be issued a pre-approval letter, the deposit is immediately refunded to the client, so you don't have to worry about that. Otherwise, the deposit is not refundable. Then, consultant agrees to have an offer submitted to buy the home of client's choice, as long as the purchase price, including but not limited to repairs, financing, and other costs, does not exceed 70% of the after repair value. Client understands that it is the client's responsibility to find a home, not the consultant. We do not show homes, not look for homes. That's your department. And we rely upon the appraisal. we don't need to see the house to determine the value, and appraiser's gonna do that, that's what the lenders all do. In preparation of submitting the offer, consultant agrees to provide the following professional services. Consultant will create a trust for the client at consultant's expense. We need that to make the offer. Consultant will employ a realtor. Consultant will provide verification of funding capability. The realtor is gonna wanna see proof that we can perform, we give them a letter. Consultant will negotiate price with seller. Upon receipt of an executed real estate contract, consultant will provide a copy to the client. So it's all full disclosure, you see everything. Consultant will provide a strong credit individual that makes owner financing possible, coordinate closing, and stay with you until you get the keys, move in, and get a deed in your name. Consultant will offer pre-negotiated credit repair services through preferred affiliates. So we've got connections that we can offer you possibly to help if it's needed. Consultant agrees to provide consulting advice and guidance on how to acquire any home client selects through any financing sources. So sometimes we have a client, they find somebody willing to owner finance, but they don't know how to put the deal together. We go negotiate it for them, consummate, conclude the whole deal, get the paperwork, all to the client's interest. Client agrees to pay for an ARV appraisal to confirm value. If the ARV appraisal supports value, consultant agrees to provide client an earnest money contract to sell the home from the trust with owner financing. The client's total purchase price would consist of purchase price of the home, financing and repair costs, plus a fixed profit of $15,000 or 15%, whichever is greater. Client understands that the typical purchase terms consist of 1, a minimum down payment of $5,000, 2, a 20-year amortization period, 3, a fixed annual percentage rate of 9.9%, and 4, with no repayment penalty. Client understands and agrees that the fee paid to consultant pursuant to this agreement is for services provided and that such fee is non-refundable. Then we got a whole section here about if there was a dispute or how it would be mediated or whatever. Upon receipt of the balance of $2,300 for the consulting fee, client is approved to begin their home search and have offers submitted. $2,300 cashier's check, you pay by cashier's check, is payable on this date. That would be your receipt. In the meantime, you can choose this up here for a receipt of $200. Okay, so so that covers all the highlights. If you want to get started, we can write a $200 check and get the paperwork. Okay. See what we got. This is a client comment sheet. You guys could each fill out one of these client comment sheets. There's a pen. I'm gonna get a file folder here for you. This is that one sheet about explaining how all the key data for you. Folder. I'm sorry.
Sorry.
And you know, being self-employed, you get all of the deductions, you can write so much stuff off, and then you do everything that the government allows you to do to where you show you operate with hardly any income from the business, and then you get penalized for
And they tax the business, and they tax every product, every step of the way.
Yeah, it's just unbelievable. So how long have you guys been doing this?
Just over a year.
Yeah?
So I put this under Curtis and Michelle Fay?
Fry.
Fry.
Someone to get their realtor to drive out there and show us the inside of that place.
Good luck.
The listing agent should be very motivated to do it, because they're gonna make the whole 6% commission if you use the listing agent.
I have a friend that's a realtor, who could propose to take 3% away from him that way.
Yeah, so then he should be able to get you in there.
Yeah, I'll have to call Sean and see if he
Yeah.
can do it. Yeah, because the listing agent does not sound like he's very interested in that place at all.
Yeah, because you even told them that sometimes it's hard for me to get out there.
Mhm.
Yeah, it's the way that realtors act sometimes, it's just absolutely amazing.
Mhm.
It is, isn't it?
Well, even when we're looking to rent out here,
They don't want to show you anything.
though, yeah, they would never call you, even call you back.
And just make the check to IBF.
Uh-huh. So we got, fill it out, I made 2 copies, one for you, one for me. And there's just an initial up here, we need to check, okay, you're paying by check.
Check.
So we just check the check box. Okay. So today is
Let's see if that's
Thursday. So we are open on Saturday, and that would probably be, by Saturday, if you want to come in, we would have all your stuff done, or you come in on Monday.
Okay. Well, it'd be, yeah, Saturday might be good.
We're here from 10 a.m. until 2.
Okay.
There's a lot of people, they can't come in any time except the weekends.
Do I need to sign here?
Yeah, on the right side, underneath on the right, yeah, all the way over, down. Right there.
There.
So we're assigned to online?
Yeah, both of these, I'm gonna read them.
I need an extra pen. I must-
Yeah, you
That's
need
my
one.
pen. Right here it says.
Yeah, Robert says bye. Okay, and then as far as, did you already bring with you verification of income, or you bring that with you on Saturday?
You know, I'm gonna see what they sent me. I forgot to give
They
it.
might be able, do you have a fax?
But I brought, yeah, I'm
Yeah.
gonna try to email it to you. Teresa was supposed to email it to me.
You've got a fax number down here, or you can email it over here, customer service. We initial right here,
I'm sorry, where?
right here.
I don't even know what I made here today.
Okay, so we got this initial, all signed up. So then Curtis can initial and sign that one, then you can initial and sign that over there.
Did I sign below his or next to his?
Right below.
Okay.
Okay, so just bring your file folder with you when you come back, and, when you come back, you're gonna get an, email instructing you what to bring with you.
Okay,
If you can,
sign here, underneath her name?
Yeah.
Yeah, right.
And did you initial?
yeah, so now you got a copy of that, you got that instruction deal. You'll get an email from us telling you what to bring in on Saturday. But basically, we're also gonna be needing to know any revolving debt
Okay.
that you may have. I don't know if you put anything on there.
Yeah, there's not much. We got car payments and, a couple credit cards, I only got a couple credit cards that.
So about 300 with credit cards and 1,200 to 825 worth of.
The 825 is a commercial loan for a truck,
Okay.
and
That's like home.
the other two are car payments. The other one's car payments and credit cards.
Then the 900 or
Yeah,
1,200,
that's for both cars.
2 car notes,
And,
and the 300 is credit cards.
Yep.
Okay, so that totals up to about $2,325.
Yeah.
So if you brought us one statement on each one of those items, that would be good.
Okay. What do we usually got on here?
But they're gonna send you in written form what to bring in, and they'll have a subject to approval for you to come in on Saturday.
Okay.
But as far as the general numbers, 130 versus 22,000 in annualized outflow, that's all pretty good stuff.
Yeah.
And,
Yeah, this is just for.
and you're gonna get something for under 150,000, so that should be easily affordable. Okay, so great, we will see you on Saturday, and so you'll get an email by tomorrow, and that'll be from our customer service department, telling you exactly what to do, and just bring in whatever they got,
All right.
and they'll issue out a pre-approval letter.
All right, sounds good.
We're ready to roll.
All right.
Okay, thank you, Michelle.
Thank you very much.
Thank you, Kurt.
Nice meeting you, Barry.
Yeah.
My pleasure.